Hello everyone, welcome back to the channel. Today we're going to be talking about Ethereum versus Conflux. So a lot of you guys were asking, what are we going to be mining after Ethereum goes to POS or proof of stake? And we have all these coins to mine. So it's kind of like a joke when people ask me what to mine. I don't even answer those questions. What are you going to be mining when Ethereum goes to POS? Probably had like 1,000 people asking that question. I ignored them all because if you understand altcoins, you understand mining, then the answer is obvious. You just mine the other 10,000 coins out there. Doesn't really matter. But in today's video, we're going to be talking about the profitability, the Ethereum profitability as of today versus Conflux profitability, or more accurately, it's going to be the algorithm of Octopus. So if you think that's interesting, hit like, subscribe, hit the bell, go to cryptollc.org. If you want us to set you up a GPU or ASIC mining farm, or if you want to buy yourself some GPUs or ASICs, right now is the best time to jump in. Prices are down, Bitcoin's down. You can get thousands of GPUs immediately shipped to you in the next couple of weeks if you wanted that. So it's a great opportunity to jump in. If you're looking to invest in real estate, who knows what's going to happen with that, or you wanted to invest in bonds or stocks. None of those, I think, compare much to crypto, to Bitcoin mining. So invest in assets, invest in miners, and then get yourself Bitcoin at a cheap price, because the price would be whatever you mined it at. So right now, that's a lot cheaper than 20K, by the way, a lot cheaper than 20K. All right, so today's video, we're gonna plug these numbers into our calculator, run the calculator, and see what the profitability is. So before we do that, let's go over these numbers. So for Ethereum, let me try to focus on there. There we go. So for Ethereum, this is a 12 GPU rig. So it's gonna be like Octominer rig or just open air rig, whatever you're running this on. We're currently doing this on an Octominer. By the way, I'm gonna go and show you that Octominer that's providing these results. So Ethereum is about 1,188 mega hashes. 12 GPUs, about 99 mega hashes. The wattage usage is 3,050. Then we're going to be comparing it to Octopus algorithm, which is Conflux. You can see right there. And for Octopus, we're doing 1,092 mega hashes at 3,500 watts. So it uses more watts because we're running these GPUs hotter, technically, because we're using the core instead of just a memory. More power usage. But you'll see what the results are below. Our electric rate is about 5.9, but I just average it off to like 6 cents. About 5.9, 5.8, but you can go about to 6 cents. All right, then we're gonna click calculate over here. Calculate that. All right, let's see what the results are. So here's the results. If you're gonna be mining Ethereum, just straight Ethereum or Ethereum on NiceHash. So you got NiceHash or just Ethereum, and then you got Conflux, straight Conflux or Conflux on Ethereum. So we're gonna be looking at Ethereum on NiceHash and Octopus, or basically Conflux on NiceHash. And here are the results. So revenue, that's as of today. Now again, today's price is really, really down. Bitcoin's at $20,000. That creates, not good, not great, I would say, profits. They're still very profitable, but not great. Obviously, if you go to 30,000, 40,000, 50,000, profits go way up. But what we're going to be looking at is this right here. Revenue and profit, right? 25 is your revenue, 21 is your profit. And then go down to Octopus, 21 your revenue, and about 16, almost 17 your profit. So the electricity is eating this up right here. You can see that electricity, because we're using 400 watts more, it's eating it up. But that's only for now at that 20K. That's only for now. So as soon as you go past 20K, you go to 25, 30, 35, 40, and so on, electricity matters less and less and less and less and less. If Bitcoin was at $100,000 a coin, electricity would have zero impact on your profits, like literally zero. You would type this in, and the difference between them would be like 5 cents, between these two coins. But because Conflux is consuming more electricity, there is that difference. But that's just for NiceHash, mining on NiceHash. Now, if we go straight Conflux, right? So we're gonna save on some fees there. That'll go up to 19.8, 0.1, versus Ethereum 21.3. And then NiceHash on Ethereum 20.38, and Octopus is 16.6. So basically you are losing profits by about 10% as of today. Now this can all change in the future when all these miners come off of Ethereum and they need to go to Octopus, algorithms, different coins, or maybe you wanted to mine, say, Zelhash, see Zelhash right there, or Ravencoin. I haven't typed these numbers in for them. I haven't put them in the calculator yet, but I already know what they are in my little notepad. I ran all the algorithms, wattage usage and speeds and all that capabilities of them, but I have not typed them in this calculator. So this calculator is just showing you generic numbers here for Ravencoin, you know, Zelhash and so on. So again, we're only looking at Ethereum and Conflux. So as you can see, the profits are down about 10%. You're still profitable, very profitable. Everything's great. Everything's going good. Again, you can get these cards MSRP or below if you're getting like thousands of them. So if you buy these at MSRP, you know, you can calculate this out. You're still profitable. You're still very, very profitable. And your return on investment is still around a year. So there's no you know, mass implosion of business or mass interest loss of investors. No. You jump in and mine Bitcoin when the price is down. That's when you start your farm, right? When the price is down. That's right now. It's the best time to start your farm. And you mine it throughout various scenarios, ups and downs in Bitcoin price, and so on. But as you can see, once Ethereum goes to POS, we'll switch to Conflux, or maybe we'll go to Ravencoin, or maybe we'll go to Zelhash, or maybe we'll go to Ergo. It doesn't matter to us. We'll switch to any of those. Those numbers, these algorithms are already plugged in. We already ran our numbers on them. We know which one produces the most amount of money. So whatever coin's the most profitable, that's the one we're going to mine. And as of today, Conflux is very, very close to Ethereum. And before we end this video, let me go show you the miner here. So here's the miner here. This is our Octominer from Miner Dude, a little bit different. So this is the one that we ran all of our tests on for various coins. That's how we know that Conflux consumes that 3,500 watts, is because we ran the test on him. Got our amp load from the copper at the panel, ran our calculations based on volts, got our watts, and wrote those watts down. That's why the calculator is 3,500 watts for Conflux. Now again, that all changes, you know, and maybe it'll make more sense to adjust the numbers, because I can set the core to 1,000 or 1,050 or 1,100 or 1,200 and so on. I can always change the core, so I can always regulate the watt load. And at any given time in the future, the watt load makes more sense to run the cards faster or to run the cards slower. Whatever it is, it's all controllable from hiveos. So we just log in. We have all our numbers done, all our calculations done. We know exactly what we're doing, what to plug in, and what coin to mine. So no problem at all. For all you guys out there that were crying about Ethereum going to POS, no impact, okay? It's maximum impact is maybe 10% loss on profits as of today. And that can all change immediately. Goes to POS, 2 weeks later, we're back to the same exact profitability that we had with Ethereum, because it'll just go to some other coin. Also keeping in mind that these coins, once all the miners switch to a coin, let's say all the miners switch to Conflux. Well, not all, but let's say a good portion of them. Another portion goes to Zelhash. That means that that coin has more attention now. That coin has more mines, more people mining it, and so on. And what's that going to do is going to create more demand, more investor demand, more speculative demand, and so on. So that coin will just go up in price, basically. That's what's going to happen. You know, everyone switches to, let's say, Conflux, will cause Conflux to go up in price. Everyone goes to some other coin, that other coin will go up in price, and so on. So, again, long term, you know, a month out, 2 months out, 3 months, well, that's not even long term, but for crypto, that's long term, right? A month, 2 months, 3 months. But it'll go back to the same profitability. That's what I'm thinking is going to happen, most likely. And if it doesn't, it might stay down for maybe 10% less profits for a couple of months. No big deal, all right? Well, that's going to be it for this video. Hope you guys like it. Go to cryptollc.org if you want us to set you up a GPU or ASIC mining farm. Now, if you are one of those investors that's is thinking like, oh, I don't want to do GPUs, you know, I believe only in Bitcoin, we have you covered. We have ASIC miners available. You can buy them on our marketplace. We can set you up a ASIC mining farm. We can start from zero, just from a plot of land, and build you out a farm from 0 to 100. No problems at all. So go to cryptollc.org. Or if you're a GPU guy, you would think that maybe some other coin is the future. We can do GPU mining. But again, all our payouts are done in Bitcoin. So keep that in mind. Our GPU mining payouts are all done in Bitcoin. You can then use that Bitcoin to convert it to whatever coin you want, such as Conflux or Ethereum or Ravencoin or whatever you're interested in. But I hope you guys liked the video. You know what to do. Like, subscribe, with the bell. And that's going to be it for this one. Until next time, bye.